You ever pull your credit score on your banking app, your Credit Karma, your Chase app, whatever, and it says, I don't know, 720. You feel good, you feel ready. Then you go to a lender to actually buy a home, and they pull your score, and it comes back 680. 40 points gone, just like that. Your stomach drops, and you think, well, I guess I'm not as ready as I thought. I want to tell you something today that almost nobody in my industry is explaining right. That higher score on your bank app, it was never fake. That lower score, for the first time in 30 years, it might not be the final answer. So stick with me, because there's a real change happening in mortgages right now. Most people have no idea it's even happening. It could be the difference between you buying this year or believing no for another 5. I'm John Ta, mortgage broker, powered by Edge Home Finance. My team serves families across the country, and I'm partnered with over 140 lenders and 400 loan products. That number matters in a second, so hang on to it. I've been in real estate for nearly a decade. Long enough to know what I'm doing, short enough that I still get excited every single time someone gets the keys, and nerdy enough to get excited about credit systems. I'll be honest with you, I'm not here to shoot your rate. I'm here to run the numbers and tell you the truth about where you actually stand. Before I get into this, one question. Be honest with yourself and drop it in the comments below. What score do you think the mortgage lender would pull for you right now? High, middle, low, no clue? Type it below. We're coming back to it later. So let me tell you about someone. We'll call her Maya. Maya is a renter. She pays rent on time every single month for 6 years, never missed. She's got a thin credit file. 1 credit card, no car loan, no big history. She went to a bank to get pre-approved. The bank pulled her score, and it came back too low and too thin. They told her no. But here's the thing, Maya did everything right. 6 years of perfect rent. So in any sane world, that should count for something, right? It just never did. Not under the old system, at least. So she walked away thinking she was years from buying. So here's what actually changed, and this is the part nobody's explaining. For about 30 years, mortgages have run on one credit scoring model. The old FICO models. Some of them built back in the 1990s. That's right, back when we had cassette tapes, dial-up internet, and Blockbuster. That same system is deciding whether you can buy a home in today's world. That's the score I pull. That's the one that came back low for Maya. However, the score on your banking app is usually a newer model. And that is why your app says 720 and the mortgage pool says 680. Alright, so for example, your Credit Karma app. That one gives you the friendly score, the one that pats you on the back, right? And the mortgage score is more of the strict one. Same family, but one's your fun aunt. The other one's the one who checks your report card. Same you, same credit. 2 different rulers measuring the same thing. So you were never crazy. That gap was real. But now you know why it exists. So here's the question I actually want you to sit with. What if the new ruler, the one closer to your app score, could finally be used to buy a home? Because that's exactly what's happening now. There's a newer scoring model called VantageScore 4.0. And as of this past year, it's being accepted on conventional and even FHA loans. Here's why that matters for somebody like Maya. This newer model can actually count rent payments, utility payments, phone payments. It can score someone with as little as 1 month of history instead of 6 months and an active account. So Maya's 6 years of perfect rent, under the new model, that's not invisible anymore. That's strength. And it's not just the thin files that are benefiting. If you got an old medical debt dragging you down, the new model treats that differently. Medical collections under $500 gets ignored. There's about 5 million Americans walking around with medical collections on their file right now. And that is knocking their score down by an average of 26 points. 26 points for getting sick. Not for missing a payment, but for just having a body. Come on now. And paid off collections? Under the new model, once it's paid, it stops hurting you. You know what that means, right? Some of you have been carrying a number that doesn't even reflect who you are today. So here's the truth most people never hear. Your credit score was never a measure of your worth. It was a measure of whether the system was set up to see you. And for the first time in 30 years, The system is finally learning to see the renter who pays on time, the person who paid off their debt, the family who has been doing it right all along. And that's a beautiful thing. Now, let me be straight with you. I'm not here to oversell this. There are some things you need to know. It is still rolling out. Only a handful of lenders are using VantageScore right now. It's not everywhere yet. Probably won't be a standard for another few years. And here's something important though. A lender picks one model per loan. They can't just run both on the same file and just grab the one that's higher. So if you walk into one bank, you get their one model. Take it or leave it. But remember that 140 lender number I told you to hang on to? Here's what most loan officers at a single bank can do. They got one set of guidelines, one scoring model, one answer. And if you don't fit, they say no, and you walk out believing you're not ready. Here's what I do instead. Because I'm partnered with over 140 lenders, I can see which one of them are already using VantageScore 4.0 and which one is using classic FICO, and route your file to wherever the number comes out strongest. I can't blend the two scores on one loan, nobody can, but I can look at your whole picture and put you with the lender where you win. So, back to Maya. We found a lender already using the new model. Her rent history counted, her score qualified. She's not years away anymore, she's a homeowner. From renter who got told no to owning her first home. That's the trajectory of a whole family changing. That's a beautiful thing. That is why I do this. And listen, maybe you're sitting there going like, John, my credit's already good. This don't apply to me. It still does. If you're in a weaker spot, this can lift you up to where you qualify. If you're already in a good spot, running both models means we find the one that makes you even stronger. Better positioning, more options. Low score, it can pull you up. Strong score, it can make you even stronger. There's no version of knowing your full picture that hurts you. So let me ask you something real. How long have you been telling yourself next year? Now, you may be thinking, maybe I'll just wait till this is standard everywhere. Hey, I get it. But here's the honest math. Yes, in a few years, more lenders will use it. But in those same few years, home prices are very likely higher than they are today. So waiting to save a little on the credit side could cost you a lot more on the price side. Here's how I actually think about it. If the monthly payment makes sense, a payment that you can sit comfortably, sleep at night, that's the green light. You buy when it makes sense for you. You stop the bleeding from renting. And if rates or your score improve down the road, we'll just refinance later. You get in the door now, and we optimize from inside the house, not from the sidelines. So remember the score you typed in the comments at the start? The one you thought your lender would pull? If that answer just changed, if you walked in sure you were stuck, and now you're not so sure anymore, that's the whole point. Drop in the comments what you think your score would be now. That gap from the comment before and now, that gap right there, that's you getting educated in real time. And here's the reframe I want you to walk away with. You're probably closer than you think. Most people are. So here's what I would love you to do. No pressure, no book down or lose your spot. That's not how I work. Just a conversation, 10, 15 minutes. I'll run your numbers both way, classic FICO and VantageScore, and you'll walk away knowing exactly where you stand. Even if the answer is not yet, then we build a plan. It becomes when, not if. If you're watching and you've been told no, or you told yourself no, comment numbers below or hit the link and let's just talk. Because if it happened for Maya, it can happen for you. Let's run the numbers. I'll talk to you soon. See you in the next video.